And good morning, everyone. Welcome back to Neely FX. My name is Michael Neely, and it's time for the weekly Forex look ahead for this week to take a look and see what's going on. I'm going to be talking about foreign exchange trading, prop firm trading, and all the fun stuff that goes along with it, and hopefully making money doing all those things. And the reason why I say hopefully is because there is risk involved. And let's talk about those risks right now and get this part done so we can get on to what's happening next week. So this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And so with that, let's go ahead and get into the what's happening this next week. And here we are. We are at here. And it's a balmy 18 degrees outside, so I decided to wear some short sleeve shirts today to celebrate the coming of summer one day. Eventually it'll get here. But at any rate, here we are. We have what's going on this next week. First, Monday is a bank holiday in the United States, which means we're going to have a slow start, slow Forex market. At least we're anticipating one. And well, maybe not. We've got some Fed speak coming in at 8:25. So that could be interesting. And look, even China's celebrating President's Day. How about that? I'm not sure what they're celebrating. Probably not President's Day. That's meant to be a joke. But at any rate, Forex Tuesday. What have we got going on? Got Canadian CPI, so Canadian inflation numbers. If you're trading the UCAD, that'll be a good thing to keep in touch for. Claimant count for I don't know what that's for. I want to say it's for unemployment in England. The number of unemployment claims. I could be wrong. But at any rate, it's got a little red flag on it. So if you're trading the pound like I do, then it might be something to pay attention to. And here we go. Oh, look at that. A whole boatload of information coming out on Wednesday for the United States. And Great Britain, we've got CPI, inflation figures coming out for CPI. It looks like they're expecting a drop in inflation. And we are seeing a great deal of disinflation taking place across the entire United States, except in about 5 states, except in New York, Washington, Oregon, California. Those are all of them that are in the chart specifically. And I think Illinois is also in there too. They could be wrong, but it looks like some of those policies are starting to erode the economy in ways that cannot be rebuilt. This wealth tax is going to drive a lot of people out of Illinois. It's going to do the exact opposite of what they're trying to do. So that's we'll see if California can hold on to the 7th largest economy in the world thing after that. But at any rate, let's see, what have we got here? FOMC minutes on Tuesday at 2 o'clock. That'll be interesting, as well as Aussie unemployment and employment at the same time. That's how they do things. I don't know. And then Thursday, we have U.S. unemployment claims. That's going to be a nothing burger. Unless there's like 500,000, which I don't see that happening. The thing that's throwing off unemployment numbers to me is that a lot of people can pick up their phone and create a new business on their cell phone in 20 minutes these days. So a lot of the unemployment claims, not really, I don't know who's doing it anymore. But at any rate, and here we are. We have, and then Friday, look at this. We've got retail sales in England, and then all sorts of European information, and then flash manufacturing services for both the Eurozone. Yeah, for both the Eurozone as well as France, Germany, the two main components of the Eurozone, and Great Britain. Means we might have, oh, look at that, Advance GDP. Advance GDP coming out for Q4, Q1. February, might be Q1. So that'll be interesting. We're expecting 2.8%, which would be interesting. Up against previous was 4.4%. If that just blows out, then that's going to be making a very interesting type of scenario thing. Core PCE, how about that? The Fed's favorite measure of inflation is coming out Friday too. So Friday we've got a whole bunch of stuff going on, and then followed by flash manufacturing and services PMI, purchasing managers index. So we'll see how that goes on Friday. So it looks like we got a lot of action coming up this week. A lot of event risk, as it were called, also known as the news. We'll see how that handles today. Meantime, let's go ahead and get back in here and look at some charts. See if we can figure out what's going on. So we're going to go to the weekly chart first because the weekly chart tends to give us more of an idea of direction. Sometimes. It doesn't always do that. For example, look at this. Where's it going? Nobody knows. You got a pretty good price rejection right here on 2 weeks ago. The end of January, and another one right here, but it looks like it's starting to wear that resistance area down. So it looks like we could have some declining dollar going on, and with some declining dollar, should be some increasing in the euro and the pound, the euro versus the dollar, and the pound versus the dollar. However, if they're declining at the same rate, then it's going to stay static. And with bond prices looking like this lately, bond yields looking like this, it looks like there's a lot of I don't want to say deflation, but a lot of disinflation going on. Texas has actually been experiencing deflation due to real estate prices coming down due to the lack of demand or to lower demand since Trump cut the border off, is what I'm hearing. I don't know if that's quite the case. I'm trying not to get political on this channel, but that's the case they're making in Texas. That they cut off the border, started enforcing border laws, and there you go. We're dropping real estate prices due to lack of demand. I am seeing a rent coming down here in Maine. Rents coming down here in Maine, so that's also interesting too. Right, rents were, when I first moved here 5 years ago, rents were higher here in Maine than they were in Atlanta. That's also because of demand, because there was more demand than there were housing. Housing they're not really keen to go tear down a bunch of trees and put up an apartment complex here in Maine as they are in Atlanta. So it's housing is on limited supply here, so it has a higher pricing index on that. But the problem is now you've got landlords that are eating a lot of interest rates, eating higher mortgages on their financed rental properties, with rents having to come down to stay competitive in the market. So it's kind of a crunch on landlords these days here in Maine. We'll see if that continues, and I'm not an authority on that, but that's just something I've been observing. So we could see a lot of things happening. Right now, it's pretty. It looks like it's starting to threaten this 97 level. Let's see if we can't get a break lower on DXY a little bit later, and we're going to have to watch these to see what happens with this. I want to just take a quick peek at this. I'm not going to spend a whole lot of time on this one. This is euro versus the pound. It's kind of interesting. There's a lot of politicians in England that are talking about Brexit and how Brexit was a bad idea. However, it's also interesting to see that the pound has dominated this area right here. We'll see what happens with this. See if the euro can continue its brief 2-week run up, but it's really choppy. It's really choppy, and its price movement is not that great. Probably have to go back down to the line to see it. That's what it really looks like. But the candles is showing a completely different story. Let's go to euro versus dollar. Again, looks like it's topping out right there at 118.68, and nothing new to see there. It wants to go higher. If we have an increasing dollar, and the euro versus dollar is almost the inverse of the DXY, because it's the major component of the DXY. It's 57%, something like that, of the DXY. And so anytime the DXY is going to do something, the euro versus the dollar is going to do about the exact opposite. So we'll see if that continues. We're looking for a run up in euro, but right now we don't see it. Right now we see it topping out right there at 118.65, where it's been for the last couple of weeks. Look at that one. Busy week for in the pound versus dollar versus the yen sell-off. If this goes much further down, and we're going to be looking at a scenario where Japan is the only country in the world raising interest rates, and everyone else is cutting interest rates. That's going to be the carry line is going to become something of the past soon. So we're going to see if that trend continues. We're still looking at this 152 level as the breakdown of the carry trade, which I'm expecting a big sell-off after that, probably down to 142, about 1,000 pip sell-off. So we're still looking for that. And if it breaks below 140, then you can forget the carry trade. That's going to cause a big shock to the Dow Jones, to the Nasdaq, because a lot of companies are financing a lot of money through the dollar yen carry trade. When that breaks down, it's expect to see equities come down. So I expect to see an equity shock. We'll see if that actually happens, though, because I'm not right all the time. Here we go. We have the pound versus the yen. A smaller component of the DXY, but it still should be doing the same thing versus the DXY. So it's got a little bit of a run up, but not as much. Pound versus dollar has been a little bit sluggish lately, having trouble topping that 137 mark. Right now, it's just below it at 137.57. So we're going to hold off on that. We'll keep an eye on it though, because if it does break 137, it could go to 142. Let's see where we're looking at on this thing. Last time it was around this level. I don't remember when Brexit happened, but only back in January 31st, 2020 is when Brexit happened. So let's come back over here to my charts and we'll see what's going on. See, I've got a Laravel tab right there. What could that be? So 2020. Oh, okay. So it's way back here. So no, it's not. Is that it? Or is that it? That's the first week that Brexit took place. It's right there. Kind of want to put a horizontal line right there and label it. I mean a vertical line. There, yeah, let's go down to the daily chart. Isn't this exciting? And we'll put it on the exact day if we can. Way back here. And this is where my love of precision is be the bane of me. And here we are. We have March 2020. December 19. Is that it? Leaves the EU. Okay, so we got that right there. Probably put that text in white so I can find it later. Text, yeah, make the text white. There we go. So with that in mind, let's go back to the weekly chart and see what happens. So the last time that at 136, right around in here, around 2022. It crashed down to here after Brexit and then came back up and came back down. It's just been all over the place, hasn't it? This looks like a great one to trade until you start getting to see how choppy it is. But at any rate, so October 2021, so right now it's at the January 2022 high, which is an interesting how these numbers come back into play. But it's right at the January 2022 high weekly close right now. So it's very interesting for that. Enough of that. Let's move on. Pound versus the yen. Again, looking at a possible carry trade breakdown on this. This is going to be a big one. Pound versus the yen lately has been my favorite trade to do because I'm finding it very fascinating that I'm finally going the right way on it. Quit trying to predict what's going where it's going to go and just trading with the market. But we're looking at a possible 187 on that. If the carry trade completely breaks down and England's economy starts disappointing, then that's what we're going to see on that. Euro is pretty much the same thing. We're going to be looking at a 2,500 pip drop. That people are going to make some money on that, and I'm going to be hopefully one of them. A 2,500 pip drop on the euro versus potentially for the carry trade unwind. So that's really what I'm starting to focus on, because all the yen crosses are coming down at the same time, which is an indication that either the bond markets are starting to take notice on that, and Japan is the only country in the world, if I'm not mistaken, that is in a position to continue raising interest rates. Everyone else is trying to cut interest rates to keep economic activity going, or to appease the bond markets, because there's kind of people coming back into government bonds right now, driving yields lower. Okay, it's pound Canadian versus the yen, and again, look at that. Possible 1,000 pips in play for carry trade unwind. Breaks below that, then it's gonna be mayhem. Yay. Oil, let's look at oil real quick on the weekly. Kind of starting to peter out right there. Looking like a little bit of a market exhaustion right there. We'll see if that continues. For oil, Aussie versus the dollar. Still on the weekly chart, it looks like it may still have some oomph to it. Be cautious though, because it's those look at those wicks, those tails on those wicks, on those candles. They're kind of big. So you're going to have a lot of potential washout. I'd keep your stop losses close, and just incrementally keep making money on those, or keep going with a bullish trade on that. It's the last time that we were here was way back here in 2023. So it's been 3 years since we've seen the Aussie this high. It could be topping out. Looking at a possible top out right there at February 2023, so we can call that 2023 high close, weekly high close, right here, and that'll give us some perspective on the market. Excuse me. Still a little bit under the weather, not that much, but starting to get over this COVID, cold, flu, whatever it was. Let's get into gold real quick. Gold is tearing it up. Again, still looking pretty bullish on the weekly chart. However, it's coming into a lot of resistance right there at 5,000. So we'll see if it continues its little run. After that, platinum, palladium, I don't trade these, but I keep an eye on them to see what the rest of the metals markets are doing. And we're watching platinum come down, palladium come down, and silver also coming down. So gold is the only metal that's still on a run. This could be weekly market exhaustion. Could not be weekly market exhaustion. I don't know. It's right at the weekly low close right now for 2026. And again, we don't have any data before that because this is just an historic run. But somebody else I mentioned on the internet that IVG is down. I want to show you this chart. This is what software companies are doing these days. This is HubSpot. This is a company that I used to work with a lot until I ended my relationship with them last year. They were an 800 when their use of AI just killed my only market for their products. It didn't make any sense. They wanted more money out of me and getting offering less services. And I was like, this isn't working out. So I let them go. And it was, I have trouble putting words to this. Their stock was at 812 at one point. Now it is down to, it's clawing back to 242. 243 is Friday's close. That is a lot of things going on in tech right now that you would think would be driving the NASDAQ lower. However, NASDAQ, let's look at the NASDAQ real quick, just for kicks. NASDAQ is not lower. It's starting to get a little bit of a turn right there, but I wonder if I can get the IVG on this. or IGV. IGV is bonds. It's a fund. Look at that. There it is. Software. Did I add this to my watch list? Intuit is another one, another part of that too. So I've each learned something new every day on the internet. How about that? This is IVG. Yeah, I know. US data may look different. I think I'm going to add that one to my chart. iShares Expanded Tech Software Sector ETF. Yes, please. Add that to my watch list. Because then I'm going to group these together too. Intuit is part of that group. Upwork is not, but I'm very much enjoying watching Upwork collapse. Upwork is another one of those companies that put AI to the front of everything, including their customers, including the people that were paying them, and that has been the bane of their. That has been the whole story behind the software sector, is that they have put AI in front of their customers, and AI doesn't pay the bills. Customers pay the bills. Just they forgot Business 101, basic Business 101, and the software sector is getting hammered right now. And I'm kind of enjoying it. So with that, that's all I've got for today. If you guys, that's all we got for this week. We'll keep in mind, we'll see what happens this week. So there could be a lot of things happening this week that will be interesting. For example, the biggest headline I've seen this week is this one. See where I don't know if I can get the story on that one. But at any rate, I can get it on Yahoo. Yeah, they're putting theirs behind a paywall. No, leave me alone. No, I'm not going to pay for this thing fine on the internet. There's a program out there I can actually get behind the paywall, but I'm not going to use it. I'd have to look it up too. Okay. Whoops. Finance dot. So if you're in tech or thinking about getting into tech, and you're in Gen Z, I'm in Gen X, so they won't let me play in tech. Walmart earnings, spending data, more AI disruption. So we're looking at a possible increase in the AI sell-off. Even there's one, AI agents. Look at this. Security is becoming an even bigger concern. So AI is really throwing some red flags right now. I think that the market is getting tired of all the promises and wanting to see some returns, and that's how Wall Street does things, and that's not going to happen anytime soon, because that's not how tech works. As we saw during I think George Noble has got a huge advantage of what's going on right now. I think he's got some insights on what's going on. He was heavily involved in the dot-com bust in 2020, 2021. Pardon me, 2000, 2001. And he's saying a lot, preaching a lot about how AI is not going to add up, is not going to live up to what it's saying. And here's another article right here that was published 19 minutes ago on as our AI agents take over, security is becoming a bigger concern. So, and I was even looking at one agent over last night that said, when will this agent be able to run your whole life? And it said, don't do it, because we're not there yet. So we'll see what happens with the AI bubble, because I think it's about ready to go too. That'll take the NASDAQ down. I think. So we'll have to look at the 7 companies that are driving the NASDAQ right now, NVIDIA being one of them. So we'll see if that continues. In the meantime, you guys have a great one. Enjoy your week. Trading will start, or the Tokyo market opens tonight at 8 p.m. Eastern time in the U.S. That's 8 a.m. their time. So you might want to check that out, or you can just wait till tomorrow and see what happens. If you like this video, then hit the thumbs up. If you want to see more of these videos, then subscribe to the channel, and YouTube will let you know when they come out. And lastly, if what's the other thing? Oh yeah, if you have any comments, by all means, comment in the comment section, and I'll get back with you as soon as I can. But in the meantime, you guys have a great one. Talk to you later. Bye.